Bitcoin was created in response to the last banking crisis of 2008, but its status as a hedge against inflation and as a hedge against the banks has never really been tested. Which leads me to this question. Have you ever actually wondered how a new banking crisis could impact the value of Bitcoin? Since our last video talking about the liquidation of Silicon Valley Bank, we saw an extension of the bank panic, with Credit Suisse now looking to be in trouble and First Republic Bank in San Francisco needing rescue from the likes of JP Morgan and other larger banks. Now the Fed is doing a bailout and it's going to get messy pretty quick, so we have to ask, who are we actually bailing out here? The panic is spreading, and the Fed just announced that it would inject $300 billion into the economy for repurchase agreements. In fact, it said it's willing to go as far as $2 trillion to shore all of these deposits up. Remember though, they're telling us this isn't the same as quantitative easing. No. This is not QE. Apparently because the intention is different. Are they still printing huge amounts of money? Yes, keyboard warriors, I know they don't literally print cash, but they are creating dollars on the balance sheet that are supposed to be repaid in the future. As trust nodes put it so well, because of inflation, for every $1,000 that they create, they're actually only going to see a fraction of that in return, if at all. Because if depositors get spooked even more than they are right now, there won't actually be any money for the banks to repay the government with. I wouldn't want to be the person that tells you what to do with your bank account. If your deposits fall under that $250,000 limit in the US and £85,000 in the UK, you are insured and in all likelihood you're safe for now. The banks that have failed so far are not your bank. Have you actually looked for a pattern with these failures? Perhaps you may have noticed something a bit fishy about this whole thing. Before we answer, if you are enjoying this content and want to see even more when it's released, please like and subscribe and share this on social media. It all helps. So what did you notice about it? Yes, there are a fair few of them that are in California. Yes, some are crypto-friendly banks, but the big commonality? These are all primarily business banks. In SVB, 90% of the accounts are uninsured because they have too much money in them. These are the banks of the ultra-wealthy, the VCs and the Silicon Valley startups. They are not your local bank, and their customers are not your granny or the local corner shop. Now, does that mean that they should lose all of their money? Well, look, probably some of you would argue it does, but should depositors, no matter how rich, be held accountable for the actions of the bank? It's a tough question, but guess what? It doesn't even matter, because with the Fed shoring up those deposits, you're paying for them whether you like it or not. Now the problem will be if regular people like us start to panic. A bank run on your regional bank will have a much bigger impact on your deposits, and even if you are covered by the insurance, do you have enough cash flow in the meantime to keep you going while the mess is sorted out? This is something that you might want to consider. Banking stocks slid again on Friday after the rescue attempt of First Republic Bank failed to reassure investors, and because these accounts are so large, look, it's only going to take a few large VCs pulling their funds to cause a liquidity crisis. Now, there is some speculation that the Fed could actually make the whole situation worse if they hold the interest rates where they are when it meets up again on March the 21st. So that date could signal another leg up for Bitcoin if its recent performance is indicative. If you didn't want to keep your money in the bank, is Bitcoin the answer? With the return of non-QE, we are seeing bullish sentiment for risk assets, including Bitcoin. We saw the price soar 35% this week thanks to a loss of faith in the banking sector. And what we might also be seeing here is crypto firms keeping their treasuries in Bitcoin rather than risking a meltdown of USDC or taking those funds into the off-ramps and into the banks that now look increasingly fragile. I believe we will see some serious volatility over the next few weeks, and if the Fed holds firm on interest rates on March 21st, another breakout for Bitcoin is very, very likely. Is this the return of the bull run? It certainly feels possible. Bitcoin is finally being tested for the very reason it was created, and I'm hoping it passes with flying colors. Look, do you agree, or do you think this is actually a major bull trap? Let me know in the comments down below. Make sure to subscribe to the channel because I look forward to seeing you in the next one.